everyone? K Kim here with the Traders Club, twotradersclub.com. Thanks for tuning in. Tonight I just want to talk about this article that came out earlier today. You can see marketwatch.com, September 18, 2016, a little afternoon time here, just about 4 or 5 hours ago here. You can see the headline reads, Dow 100,000, it could happen, says one of the stock market's biggest bears. This guy's name is Marc Faber, and he's been calling the market crash really since 2011. Every year, this guy will come on CNBC or any other prominent, prominent TV or media sources and start calling things out. What I'm not concerned is not so much as to what he's saying and what he has to share as far as the content or why he believes certain way, is that by this time, can we really believe anything he says? That's the problem here. Because let's just quickly recap before we get into this article here. Let's quickly recap. Okay, this is a Market Watch. This was just a month ago. August 11th, 2016. That was precisely a month ago. Okay, look, September 18, right here, August 11th, same marketwatch.com, right? This is where he says why Marc Faber is calling for an ugly stock market crash again. Ugly stock market crash. You understand what crash is, right? If you don't understand what crash is, if you go to this video exposing Marc Faber, the stock market crash lunatic, I put it on my blog on YouTube. You can search it, you can find it, and explain it. Explain the fact that what he means when he says crash. He's not talking about certain just short-term pullback. He was not talking about like 10-20% corrections. He's not talking about the shakedown in the market. When he says ugly stock market crash, he is talking about something worse than 2008, something worse than 2000. So we have to understand the degree of the potency, the level of his language and sentiment and the tone of his voice to understand what he's really saying. So just to be fair, just about 2 months ago, this was, a Wednesday on CNBC, Wednesday, 2009 or 2016 June. So just a few months ago, he said that investors are on a Titanic. You know what happened in Titanic? Everybody died. Only few survived. Everyone died. That's what he's saying. He's saying the whole stock market is going to go to nothing. Whole economy is going to go to nothing. Whole country is going to go to nothing. Maybe the whole global market is going to go to nothing. That's what he was saying 2 months ago. And months ago, he was saying that there's going to be an ugly stock market crash. And then, today, September 18, 2016, he says that Dow can go to 100,000. And you might say, well, okay, maybe he realized something in his research, something was bad, something was wrong, and he's recanting from it. He's refuting his prior ideas. I don't think that's what he was doing, because again, if you go back to this article here that I wrote, 2011 he talked about the bear market starting. He's talked about 2012 massive meltdown in the market. In 2013 he says there's going to be a 1987 style of a crash coming, and if you understand, if you watch that video, I give you guys a scenario. What happened in 1987? Going back to looking at my chart, what happened in 1987? And then in 2014 he says worse than 1987, and then 2015 greatest danger, 2016 40% drop, and then 2016. So you can see the nature of his language, the provocativeness, how he's here to provoke you. Maybe he's here to get the headline, major headline. Because and now, finally, after 6 years later, He wants to say the Dow 100,000. And why couldn't he kind of tone it down a little bit, make it more realistic? You see, the psychology of this market of most common people is that they don't want to hear when you say something like, well, there's a great chance that Dow could get into a healthy bull market. Nobody wants to really hear that but that's the right way to look at the market, because nobody truly knows what's going to happen in the market. Because again, this guy's been calling the crash since 2011. He lost a lot of credibility, yet a lot of people still, forgets about what he's been saying. And let me give you perspective what he's really saying when he says Dow to 100,000. Okay, I mean, he's came before to this epoch times, September 12th. That was just about a week ago. He said that Marc Faber Dow could reach 100,000. So let's examine that real quick. Let's look at the chart here real quick, what he's really saying, so we can kind of have a better understanding of this. So let me put myself down here a little bit. You can see this is Dow Jones Industrial Average. Actual index here. This is on a diamond. This is an actual index. You can see that currently we're trading at 18,000 level. 18,000. This is today, okay? September 18, 2016. As of today, Sunday, Dow Jones Industrial Average is trading at 18,000 level. 18,000, okay? So let's see what he's saying. Say we got 20,000 right here. So just watch the number that moves as I push this up. 27,000, 28,000, 35,000, 40,000, 50,000, 60,000, 80,000, 100,000. Finally, right, this is what he's saying. The Dow could reach 100,000. And when I did this, my chart, it just became a pancake. We can't even see. We can't even see the current price action because that is just appalling. That is just preposterous to call it right now. We may get there, but to call that right now after you've been calling the ugly stock market crash just a month ago, and again, please, if you could have just said, hey, I've been wrong since 2011. I've been wrong. And after deep research, going back to what I've been saying, and kind of re-looking at everything, I think the crash might not happen. I think there's a good chance that Dow Jones Industrial Average could get into some new bull market cycle. You might prepare for maybe historical breakout. Like here. This is common sense. If anybody gives you like the exact number or exact date, because nobody knows, guys. You understand this? Nobody knows for sure. How can you give me exact number that you will get 100,000? That could take, I don't know, 10 years, 15 years, 20 years. And by that time, everybody's going to remember. And then if markets start to tank again, you know what he's going to say? He's going to come back and say, aha, I've been right. I've been saying it. In August, I said the market is crashing and happening. And nobody's going to remember what he's been saying now. You see? So this is what he's saying. So you see, when you look at the chart, you see the degree, the level, the prominency, what he's saying. Right? It's just not realistic at this time. Not right now. It could happen. Even if I put in a log scale, this is a log scale, okay? Even if I put this in a log scale, it's still a pancake before the 100,000. This is 100,000, guys. So we have to understand what he's saying. And you have to understand the fact that every year he always have to come up with something that is very provocative, something that will catch your ear, something that will just like, oh my God, this guy said what? it's not enough to say, well, hey, this is my article back in April 25th, 2016. So that was about what, 5 months ago. Stocks historical breakout, prepare for a new secular bull market cycle. And I thought that was provocative. I don't usually use provocative titles. If you guys see my YouTube videos and my articles, usually it's always pretty logical title, like say, hey, the levels to watch. Hey, there's a good chance that market could continue higher. Hey, and if anything provocative that I would ever say will be maybe there's no stock market crash, the market historical breakout. But 100,000 though, 100,000 on the Dow, that's just not right. That's not right. At least not right now. But to be fair, I also believe Dow Jones Industrial Average will do well. And if you go to this, again, stocks historical breakup, prepare the second bull market cycle, it's on my blog or, on YouTube. I talk about, their levels that watch this. I talk about this, and I'm looking at price action here and historical chart patterns. I'm talking about this megaphone pattern. Last time we, retested and broke out of that, we had a pretty good bullish run. That was about 15 years of bullish run, and I was proposing that given these facts and these data as I see, again, when I posted this, when market was still shaky, think about it, market just made all-time high just a few months ago, April 25, there's still a lot of fear looming in the market. A lot of people are calling crash back then. So, interesting how nobody really, at the time, now it seems like, because as I look at my YouTube views, I get a lot of views on these, but before, nobody wanted to listen to. But anyway, so, to be fair, I also believe this, Dow Jones Industrial Average could see possibly, there's a good chance we could see something similar to 1985 or 2000. Similar. And along the way, we're gonna see corrections and and sharp declines, and even this was 1987. But Monday, along the way, we might see something like that. But looking at a big picture, we could see another move like that's what I was talking about, right? And if you go through if you watch this video, I talk about why fundamentally, what is the catalyst for Dow Jones to move that much. So you can go ahead and watch that. But anyway, so let's just kind of go back here and kind of watch what he's saying here. So Marc Faber, Dow could reach 100,000. 100,000. That sounds just so not realistic right now, but Dr. Doom explains why central bank intervention is leading to inequality and how to invest in this risky environment. And now he wants to give us, strategies how to invest. I mean, do you really want to listen to this guy to learn how to invest when this guy's been calling market crash since 2011? And obviously, if you've been listening to him since 2011, 2013, 14, 15, 16, you really couldn't invest. You really couldn't invest anything because market thrived since 2011. Market thrived since 2011. We saw shaky market in 2015, 2016, which I talked about how it's just nothing but was just kind of a consolidation, digestion, kind of a resting period before the market continues to higher. A short-term correctional move, channeling type of action, but it was nowhere near a crash. Crash is what you see in 2008 and 2000. So this guy's been calling that since 2011. Now finally you wanna understand how to invest from this guy. You wanna learn. I mean, I just don't understand. I just how that ties together. They ask, how long can the central banks manipulate markets? this is an issue that will be decided by central bankers. I don't have control over the manipulation of central banks. Of course, nobody does. Nobody does have control of this manipulation. People always talk about, don't ever make excuse. If you make a wrong trade, if you're losing money in this market, you always may want to make an excuse saying, well, central banks, they're manipulating the market. It's the government. They keep printing money, the QE, and it's just market is so manipulated. If you knew this market was manipulated, why couldn't you benefit from it? Why couldn't you? If you knew it was manipulated, why did you start putting your money in the market? It's really, nobody put a gun to your head. And if you want to make excuse on government and the Fed and all that, it just you shouldn't make any excuses. It's your fault. You put the wrong money in the wrong place. You gotta understand that. They can keep buying assets and they can keep on buying equities and real estate, and then now he's finally realizing this fact now. I mean now. After what? Since 2008? I mean, they told us they're gonna do this in 2008, and after 8 years later, after you've been calling the crash since 2011, you wanna call this now? You wanna say this now? Just give me something new. So the madness in the present time may go on. Just gonna zoom here a little bit, right? So he says, the madness, where's the madness? So the madness in the present time may go on in a manipulated market. It won't end well, but you don't know when it will not end well. How far the manipulation can last. It sounds like to me he's learned this. Not that he already knew this, he has learned this throughout the years. Because again, remember I said he's been calling the crash in 2011. He just told us. He just told us that in a manipulated market it won't end well, but you don't know you don't know when it will not end well. When he basically telling us he does not know when. Like I said, nobody does. Nobody does. But why have you been calling the crash since 2011 if nobody knows that? So to me, though, it's not something that he knew about this. It's something that he learned this. He learned through the years. He has learned this fact just now. Of course, nobody will know. This is why you throw away all the fundamental junks and just study the price action and stay with the trend. Go back. Do not, okay, here. Stop listening to this stuff happening in media and the news and the Epoch Times or the Market Watch or whatever, wherever you look listening at. Watch the price action and look at what Charles Dow had to say in 1918, back in late 1800s. What Charles Dow had to say. Trend is assumed to be in effect until it gives us a clear signal that it has been reversed. We never had a reversal pattern. I have tons of video. Tons. Go here. Tons of video on this. And I keep preaching on this. 2016 stock market crash out analysis compilation timeline. If you go in this video, there is, in this video I talk about, why why we're still in a major primary term uptrend, right? So instead of just getting your emotions stirred up with these articles, and you just always just in this kind of a what's the word? You know what I'm saying? You're stirred up emotionally. Your adrenaline is pumping. Your money. Are you gonna lose that money? Should I go sure? I just watched that movie, The Big Short. He put everything, and he made a 800% gain. Maybe I need to do something like that. This is my chance. 2016, everybody's calling the market crash because everybody was calling the market crash in 2016. I mean, I have some of the, bulk mark that I saved, and some of my videos, people are telling me, well, okay, well, you're the only one saying the market crash is not going to happen, versus all these well-known billionaires that calling the market crash is going to happen. And compared to those, I'm just nothing. I'm just nobody, of course. So obviously it's just up to you to choose who you listen to. But I'm not going by my feelings or emotions, anything like that. I'm going by the price action. Price action told me that the trend is assumed to be in effect until it gives us a clear signal that it has been reversed, and I didn't see any clear signal. And with the all-time high print on the Dow Jones S&P 500 index and the NASDAQ, and then semiconductor made new highs and just thriving with all this data, and then what is that? The Wilshire 5000 also made an all-time high. New York Stock Exchange quite not there, but it's getting there. Russell 2000 is so looking pretty healthy as of today. And so I'm looking at a big picture, and I have to say that, hey, the market looks to be ready to resume back up. But it seems like in a manipulated market, it won't end well. And here's the thing about it is, do you really care if it's manipulated or not? Do you really care why market moves, really? Do you really want to know? Or do you want to follow its price action? Wherever it moves, you just want to follow it. You see, biggest endeavor in stock market is calling things without evidence. Okay, these are things what we call conjecture, right? Without the proof, you just call things because you feel that there's a fear looming, and because of that fear, the market could crash. And a lot of times, when you talk about fundamental analysis, a lot of time what it is basically all the negative data. This is what fundamental analysis, I'll tell you. All the negative data and news that you hear about in the news, you just pull that in and say, this is why market is going to crash. Okay? And then let's say market actually did not crash and then continues higher. You know what you do? And then you bring in all the bullish, or not bullish, but positive thing about the market. You even say, well, because the Fed is going to keep, like Mr. Faber says, they could essentially monetize everything, and because of these reasons, it could be bullish. But you know what's funny about fundamental analysis? They could say because of this, because of manipulation, the whole thing is going to crash. But some people could say, well, because of the manipulation, it's going to continue higher. You see, sometimes fundamental analysis, it depending on who's saying it in what way. Same fundamental data could give you either bullish or bearish analysis. This is why only the price action is true. Price action will not lie to you. People lie because they're provoked. They're manipulated by their emotion. That's how we live our life. Is we're people with feelings, emotions. So we're manipulated, we're guided, manipulated by the emotions and feelings. How many times have you been where you were so angry, but the next couple days you think about it, why was I acting like that? Have you ever had that happening? You're so mad at your partner, your wife or your girlfriend, whatever, right? And then a couple days later you thought about it, I'm like, oh my God, I was such a jerk. Why was I acting like that? Like, you don't even understand why you were saying those things and you're acting that way. And why you're explaining stupid things in the way you did. A lot of times market works that way. Like 2016, so many people call market crash, and let's say we don't get that crash and we continue higher and keep making new highs and then get into a kind of healthy uptrend. Kind of everybody comes to that realization like, why did I think that? And then they don't blame themselves and they say, hey, there's something wrong with my analysis. There's some shortcomings. I undermine certain data. Instead of saying that, they'll just say, well, it's manipulated. I was right, but, I know, but the market, the Feds, they keep printing money. That's why it's keep going up. I was right, but, Yeah, but I lost a lot of money, but, you know, I'm still right. You know what I'm saying? So I think if you really want to grow in the market, it's really, you stop listening to the media and everything else. Just just you and the market, and, you know, study the charts and study the price action, because chart prices, all it is a psychological behavior of the market, the traders and investors. You know what I mean? That's what you need to know. So let's continue on here. Some chart. It's not relevant at all in my opinion. Zimbabwe prints money. All these sophisticated looking charts, that doesn't help much in my opinion. Really, it might help you look at things, this economical view of the overall, market, but as far as the, where the direction of the market, those things I really don't think. That's why I don't look at any of those. How can we avoid a collapse? I mean, seriously, is that what you want to ask this guy? You want to ask this guy, how can we avoid a collapse? This guy's been calling the market crash since 2011. 2011, 2012, 2013, 14, 15, 16, 17, not 17, but 16. Just 2 months ago. Hey, 2 months ago. Oh, no, month ago. No, month ago. This guy called ugly stock market crash month ago, But you want to ask this guy. Oh my gosh. You want to ask this guy, how can we avoid a collapse? No. Oh God, what are we doing? Where are we going with our? What are we? What are we printing? What are we What are we writing? What are we reading? What are you reading? How can we? Why are you asking this guy? This guy been calling the collapse since 2011 and been saying it every year since then. And just a month ago he said on Market Watch, we're going to see our ugly stock market crash. And now he's saying Dow 100,000. 100,000. Dow 100,000. I mean, so please stop it. Stop asking stupid questions. You know what would be a better question to just kind of fill them out a little bit? It'd be like, Mr. Faber, you've been calling market crash since 2011. 2011 you said that we're going to have a bear market. 2012 you're going to see, you said that, didn't you say 2012? You said that there will be massive market meltdown 2012. I got all these proof here. Click on these links. Go to Exposing Marc Faber. Click on these links and you'll see. I didn't just make this up. In 2012, you said a massive meltdown. And then 2013, you said 1987 crash coming, which never seen. And then 2014, you said it was worse than 1987. 2015, you said greatest danger. 2016, early 2016, same year, you said you're going to see 40% drop, which never happened. And then 2016, just 2 months, a few months back, 2 months ago, June, you said the investors are on Titanic. And then just a month ago, you said on Market Watch that there will be an ugly stock market crash. And the right question would be then more like, Mr. Faber, you've been calling some provocative things. You've been calling some these just radical market calls saying that we're gonna have a crash since 2011. What do you say to yourself? What do you got to say to everybody? That will be the question, not that how can we avoid a collapse? Because this is definitely not a guy to ask. And so Ms. Faber says, well, you better ask the bureaucrats what their plans are. You see, how can I ask the bureaucrat? Who are you talking? So can I call somebody? Can I right now just go call bureaucrat and be like, hey, Mr. Bureaucrat, can you tell me your plans? Can you tell me your plans and how we can avoid collapse? They had zero rates since December 2008. Soon 80 years pass, and that hasn't boosted economic activity for the average household, not in Japan nor the United States or the EU. Now they talk of fiscal spending. Yes, I know. That hasn't boosted economic activity for the average household. I get that. That has nothing to do with stock market, because since 2008, market thrived. Yes, we're not economists. We're not here to figure out how the market is working, how you know what I'm saying? I mean, I feel for everybody. Yes, I care for that. I want mid household people to do well. But since 2008, market all tripled. It tripled. That's what we care about, because we're market participants. We trade the stock market. Do you understand what I'm saying? We trade stock market. Yes, I know that. 80 years passed, and that hasn't boosted economic activity for the average household. But is that what you really want to talk about? Is that why we're here? S&P 500 tripled since 2008. But you've been calling the market crash since 2011. So they will blame the economic woes to these people. To some extent, this is true. We're still not create influence. So I mean, all these, lingos and all these sounding impressive. Like, I know the economy. Things again. Investment strat. How do you invest in this environment? You ask him that in 2011. This is not the right question. What did you invest on 2011? Since 2011, I want to know. How did you make money since 2011? Because you've been calling the market crash in 2011. If you've been calling the market crash in 2011, you obviously didn't invest in the equities. Maybe you probably went short on the equities, or maybe buy a bunch of puts. I don't know. You probably went long on the other things, maybe on gold, and maybe the commodity, precious metals. And we're probably going long since 2011, which not done well. So if you went against the equities since 2011 and you found something that has a inverse relationship to equities, he hasn't done well at all. So how do you invest in this environment? That's not the. I think I'm getting kind of tired of reading this. Yes, I'm drinking water and tea at the same time, and I need that when we talk about this. Most assets by traditional valuations are overpriced. I mean, of course, but doesn't mean you can look at a big picture and say, hey, it's high. That's what he's saying. It's went up a lot. Doesn't mean it cannot go any higher. And then you talk about German bonds, Swiss bonds, 10-year Japanese bonds that I don't know if there's any correlation with the S&P 500, the equity. I just, what I mean? Most people, when they read this, they don't know how that pertains. So just go back to thinking, this is not the right guy to ask how do you invest in this environment, because clearly he really don't know, because he's been calling the crash since 2011. And last question here, but you will not only buy cash and gold mining stocks, right? Wait, but you will not only buy cash and gold mining stocks, right? I think holding all your assets in cash is very dangerous. I want to be diversified. I hold some cash, bonds, equities, some real estate, and some precious metals. Equities. So, he holds these things. Diversifying, yeah, that's very insightful, sophisticated answer, because nobody knows about diversification. It's funny because a while back, I'm not gonna find the clip, but you know, Marc Cuban. You guys know Marc Cuban. He said on this clip they were asking him about the investment strategy. He said, "What do you think about diversification?" He said, "Diversification is for idiots." And in some ways, I understand what he's saying. I some ways, because what he's saying is really, if you know what you're doing, you really don't have to diversify. And I don't. It's not that I don't believe in diversification. He just basically the whole interview he just threw a couple lingos here and there, talked about Japan bonds, German bonds, and something like that. Talk about overall economy, and just kind of made himself look smart, you know, and something like that. But really, overall, just content of it all, he really didn't say anything they didn't know. You know what I'm saying? But really, though, just the way he comes out says Dow could go to 100,000. I mean, every single time he comes on, he always have to come out with something so provocative that it's almost like hypnosis. Like, oh my God, this guy just said Dow to 100,000. Let's just put all my mortgage and farms on Dow, and then we'll just wait 20 years and we're gonna become multi-millionaires. And then everybody forgets because they're so excited about this. Everybody forgets what he's been saying just a month ago. Just 2 months ago. Titanic. Month ago, ugly stock market crash. Just a month ago. He should have a last comment and say, hey, I want to say this. You know, I just want to say that I know I've been calling the crash since 2011, but I was wrong, and in my research, I undermined certain data that I overlooked, and I believe that it was wrong call. But I think there's a good chance, though. I think the Dow Jones Industrial Average, you know, could continue higher, get into healthy bull market, and everything I've been saying, I recant from it. I dismiss those. I think market doesn't go back bullish. That's what he should have said. That's not what he's saying. So, again, this is a reason why I don't read these articles. I don't follow any of these publishing companies. You know, I go through stock tweets and Twitter for entertainment, not that I want to learn anything. So I just encourage you that study the price action, study the technical part of the market, throw out these headlines, because the reason the headlines are so provocative is because CNBC, Market Watch, all these different publishing companies, they're publishers. What does that mean? They make money when you read it. Nobody wants to read it when you said, well, important levels to watch this week. Right? Nobody wants to read it. But if you says, why this is the best time to buy Apple, this is a historical moment, and everybody want to read it. Why S&P 500 could go to, 5,000, 10,000. Why Dow Jones Industrial will go up to 100,000. Why there will be, ugly stock market crash. Then you want to read. Then people want to read it, and then you share it because it's so provocative. But when you come out with articles like, hey, important, S&P 500, yeah, 4 important levels to watch, 4 important price levels to watch. It's like, I don't care about that. I don't care about the 4 important price levels. I want to know if this thing is gonna crash. So, anyway, so Sunday evening, I've had a great time having lunch with my dad, and I was just in a kind of a good mood, and I thought, and somebody tweeted me the article. He's like, oh, okay, we could look at this. What's going on with this guy now? So I just, if you have some of these kind of these articles that are very provocative and you want me to talk about on these videos, please feel free to send it over to my Twitter account here, 2K Kim. Keep in mind that I myself stopped tweeting I've been tweeting without the dollar sign, so I just want to honor those following me. So you can see I do not use dollar signals anymore, or dollar symbols anymore. So I don't want to be in that pack where just in a jump. I don't mean to put everybody down. I'm not saying I'm the best at all. I'm not saying I know everything they don't. I'm sure there are a lot of good. I think that there. I know there's some good people who, you know, but I just don't want to be in that pack. I kind of want to share ideas, talk to the traders who have a same mindset, the way I see the market, who understand the technical the beauty of technical analysis, the value of technical analysis, who understand the being provocative. I'm not here to be provocative or anything like that. I want to give solid technical analysis, and I want to talk about it as somebody who have passion in trading. And just want to talk market, and just want to make some money and just grow together. And I think that's why for those people I want will help that community. So that's why on Traders Club account you will see Traders Club account, not my K-Kim account, but Traders Club account. After a couple days later you will see it, some of the articles getting tweeted with symbols, but you'll get it a couple days later. So obviously, you can join me on stock tweets as well. Also, stock tweets I tweet without the dollar sign there. But best way to always get hold of me is always you can go to my this is my blog here. Best way is to go to right here, notification. That will be best way. Is that way you would always get my analysis videos, something like this one, on your email inbox, so you'll never miss analysis again. Communicate with me, leave me comments on my blog. You can talk to me on Twitter and Stock Tweets, and let me know what you think. If you have any comments, just below, leave some comments, see what you think about this, or if you think about anything else, and can communicate with me. Anything else I want to share? Nothing else today. I'll do market update video this week. You can also follow me on YouTube. I've been putting a lot of videos on YouTube as of late. So that should do it, guys. Have a great weekend. Enjoy your Sunday evening. Hope that this program, or this show you wanna call it, or this video found you, I don't know, this was more of an entertaining video with anything, so I'll talk to you guys next time.